Hey, this is Justin with DayTradeTheMarkets.com on the afternoon of Monday, February 25th. Today was a really interesting day in the markets, and I wanted to go a little bit in depth and look at the emini S&P or the stock index. Wanted to look at 10-year notes, so we look at the interest rates. Also wanted to take a look at the euro. Look at these over a few different time frames, and really we had such a big sell-off in the index markets and in the euro, and then a really big rally in the bonds, which is somewhat it would be expected in that scenario. And so I wanted to look at that, show some of the clues that could help you become aware that this sell-off was occurring, that can at least help you stay on the right side of the market. I mean, that's kind of first and foremost what we look to do, is identify when either buyers or sellers are aggressively in control of the market, so that number one, we can avoid being on the wrong side of the markets, in other words, protect ourselves, and then number two, take advantage of those situations and ride that train. So I wanted to look at that, and before I do that, though, let me give a quick background. The idea or the methodology that we use to look at the market is we try to be able to put the market in context or make sense of the market in real time by looking at both bigger picture and real time order flow based really great analytics in terms of what's going on in the market right now. Which side is in control? How dominant are they? And by putting these, what we call pieces of the puzzle together, you can make better sense of the market, see things more clearly. And obviously, the idea then is if you can see things more clearly and do so in real time, you can make better decisions. And as you become better at making decisions, your results obviously will improve. In other words, we don't so much focus on making money. What we try to focus on, or what we try to think about, is the decision-making process or making sense of what's going on, because if we can make good decisions, the money takes care of itself. So what we try to do is start from the idea of what's going on bigger picture and put that in the context of then what's happening in real time under the surface of the market, or in the real time second by second auction process of real time. And we have the software that makes that visually easy to see. And so the idea here, for example, when we're talking about the bigger picture, heading into today on the emini S&P, and this is a 1-minute chart. I also want to show it to you on a more intermediate term chart in just a moment. But what we are looking at is we had basically a neutral or mixed bigger picture bias. We know that we're kind of in a decision point, bigger picture, okay? And we were looking at, as kind of our decision points or our key areas to watch, this 2315, 2350 area as potential resistance. If we could get above that and have acceptance above that, then we would say the bias is up. And then the 1491 level on the downside is potential support, and if we could get below that with some good selling aggression, then our bias would shift to down. Okay, so certainly didn't necessarily expect this all to happen in one day, but that's the bracket that we were essentially watching to go from more of a neutral, bigger picture bias to either up or down, bigger picture. And you can see here we had some pretty strong buying. The dark blue is what we call level 3 buying aggression. In fact, let me briefly go over that. What we're looking at here is these level 3. These are what we really like to watch. This is telling us that either there's extreme buying or selling aggression, and it's buying or selling aggression that actually moves the market. So if we can identify that in real time, the level 2 are the strong, but especially if we can identify these extreme buying or selling aggression moments within the market, and then determine, do we get follow through in the direction of that, or is it capitulation and rejection? It's giving us a really clear roadmap, at least to the short-term direction of the market. And then when you can put that together with other pieces of the puzzle, it forms it takes a little bit of time and you have to put a little bit of effort into it, but it forms a really clear picture of what's going on in the market in real time, so that again you can stay on the right side of things. That's certainly the concept. So again, if we go back to this, we had rally at the end of Friday. We gapped up, and so we want to see, are we going to fill this gap, or are we going to go and test this 2350 and take that out and have another rally higher? And you can see our first strong structure was this level 2 buying aggression bar, so we did have a follow through of a couple more points after that. We tested into this resistance area at 2350 and started to sell off. And you can see here that when we tested the lows, we did so on what we call a high velocity move and a level 2 buying aggression bar. And then when we tested basically the gap the gap low from yesterday, we had another decision point, or from Friday, we had another decision point. You can see there was a bit of back and forth, but when we pierced through on this high velocity move and then retested the high of that with this red resistance area, we decelerated a couple times, and then it was just kind of off to the races. High velocity move, another one there, tested back into here. We didn't quite make it up to this newer resistance. We busted through on a level 2 selling aggression bar, retraced back to this resistance point. You can see retraced to this resistance point, turned over, and it was just off to the races, and we tested that 91 and even took it out. On a bigger picture level, we can also see the same thing if we look at the 15-minute chart, and this is a 15-minute chart on a 24-hour session going back about a week. So in other words, here is today or Monday, and I'll go over that. Here's Friday, Thursday, Wednesday, Tuesday. You could see that on Tuesday we had we rallied up. We'd been in consolidation. We rallied. Then on Wednesday, you could see we started to sell off with some pretty severe selling. In fact, 2 level 3 selling aggression bars in a row. And you notice the market tested right up to where those 2 touched. And then we sold off pretty hard with these level 3 bars, high velocity move. Same thing here. And then you could see we started to attract, when we got down to this 1495 area, this final level 3 selling bar was rejected, and we started to attract some strong buying. I know this is pretty tight. It's a little hard to see, but you can see that's when we started to attract some strong buying, and we had a bit of a battle. This level 3 selling bar did not have any follow through, and we took out its high. Another battle there, where you can see we had these level 3 selling bars that tested back into the support zone after we had turned green in here, and when we rallied up, here's a couple level 3 buying aggression bars, tested the middle of those. And then you can see today we tested up into this resistance zone. Well, I want to point something else out actually before I do that. If you look back to Wednesday when we had a pretty major sell-off, you can see this is the area basically where it started. Right here where we had some extreme selling come into the market. You can see that's where we tested today. Basically the start of this aggressive selling is where we tested again today. When we tested into that level, you can see we tested into it, had a deceleration right there, and then it was just off to the races with these level 3, level 3, level 3. And you can see if I just kind of focus in on today, basically here's where we open the regular trading hours, tested the high of that into this red resistance area, decelerated, and then you can see here's 2 in a row, 2 of these level 3s in a row, right where they test in the middle is obviously a nice spot. You can see it was just a pure selling wave on the bigger picture. Okay, so obviously if you're a bigger picture trader, or if you're looking for a little bit of evidence on the bigger picture, that's giving you some real-time information to be on the right side of the market. What's that telling us? Certainly don't fight this and get long at any point. Okay, and then secondly, how do you get on board on the short side? How do you get into low risk, high reward type of trades in that scenario? Well, again, we tested 2350 bigger picture, rejected. Extreme selling starts to come in. That's on the bigger picture. Translate that over to the 1 minute or any time frame that you want to look at. And let me just zoom in on the last half of the day, for example. We make new lows here, resistance area, the market tests into there, decelerates, pretty good opportunity there. Here's another resistance area, we're decelerating on that, pretty good opportunity. Make new lows, the caution zone turns over to resistance, obviously pretty good opportunities in there. So again, you're trying to put the clues together. Sellers are in control of this market. We have evidence of that being the case. How do you get on board for some low risk, high reward type of opportunities? Now if we look at, we have a similar scenario here if we look at the euro. And this is a euro, and this is a 3-minute chart. That's the time frame I like to look at the euro on, because it's a longer trading session, and it's a pretty volatile market. So I want to give it a little bit more of a bigger time frame for a day trading type of a chart. And you can see, again, when we look at these level 3 buying or selling aggression bars, you can see we had some level 2 bars, so it's showing us buying aggressions in control. And then we make new highs on these level 3 buying aggression bars, but we can't get any follow through. Okay. And the fact that we couldn't get any follow through on a level 3 on the high of the day is our first red flag. And in fact, we started to attract a little bit of selling aggression. Had one more push higher. Not only could we not take out that high, not only could we not take out the high of this level 3 buying aggression bar, but the very next bar was a level 3 selling aggression bar, which did have follow through. Okay, so that's a pretty good clue to rejection of bullish aggression and then insertion of selling aggression on an extreme nature. You can see we bounce off the support a bit, and then it's just off to the races with selling aggression, selling aggression. Every time we have a buying bar, you can see immediate rejection of that buying aggression bar followed with selling aggression. That's telling us sellers are in control of this market. Okay, same thing. It's just showing us how do we stay, again, you can see the filter turns over right around 10 o'clock Eastern when the market's near its highs, but it's showing us sellers are just in control of this market. So obviously avoid the long side, and how do you get in on the short side? Again, it's context, context, context. That information alone is incredibly valuable. I'm not even going to get into talking about the different trade entry type ways that we look to do that. Same thing now if we look at the bonds. And this is the 10-year notes. This is a 15-minute chart looking back a week or two. You could see typically the bonds are trading a pretty tight range, and they hold their levels pretty nicely in this range. They bust out and then they test, and they typically hold in consolidation pretty nicely. Okay, we tested here, and you could see we started to get some buying aggression come in down here, bigger picture. Selling aggression earlier today, rejected, followed by some strong buying aggression, and you can see it was off to the races. That's, again, bigger picture. Let's hone in on a more short-term chart, though. Here's 10-year notes on a 1-minute chart, and I like to look at a 1-minute chart in the bonds because it's a very slow-moving market that holds its levels very, very closely. You could see early on we start to have some selling, level 2 bar with follow-through, and it's hard to see, but that's a level 3 selling bar with no follow-through, immediate rejection. So that's our first red flag that this move lower in bonds might not be too good. And then you can see we test its low again on this support zone after we tested the resistance zone. You can see already at the low of the days the filter's gone green. Okay, and the support zone holds. We have a level 3 buying bar with follow through, high velocity move taking out this resistance, and then you can see again it's kind of off to the races. We make new highs on level 3 bar, level 3 bar, level 3 bar, and that's relatively rare in the bonds. And you can see we had an attempted move, the market had auctioned high enough in this case to attract some aggressive selling. And you could see as soon as that high was taken out, it was rejected. In other words, in a bullish environment in this market, high velocity move and a level 3 bar with follow through, it's just off to the races. A low risk entry is obviously waiting for a retracement down to the support zone. We make new highs on a level 2 bar, and you could see it's not until we make new highs that we start to get a little follow through on some selling. So it kind of told us that things were cooling off a bit. So again, same idea. How do you take the evidence of what you're seeing in real time to, number one, make sure you're not on the wrong side of the market. Number two, make sure that you're on the right side of the market and get in with low risk trade opportunities. If you're interested in seeing some of the trade ideas that we talk about, I hadn't really had time to get into this. Just send an email to info@DayTradeTheMarkets.com, and I can send you some examples of some trade entry ideas. But again, it's about, number one, putting the market in context. So many traders focus first and foremost on trade entry, and that's great if the market happens to be in alignment with what your trade entry might be at that time. But if you can flip that equation and first focus on which side's in control of this market so that you can stay out of trouble and know which side you want to be on, and then focus on getting into the market with that, I think you'll see a world of difference. So it's a subtle difference, but it's very important. So again, pretty interesting day in the market, a lot of opportunity today, and I just wanted to delve into some of the details and some of the clues on that. So if you have any questions about that, let us know. We have a lot of other videos on the website, trading examples, that sort of thing. But if you have any questions at all, let us know, and we'll be happy to answer them as soon as possible. Okay, hope everyone has a good evening and a good Tuesday. We'll talk to you soon. Thanks.